hey, we've had periods of time. I've been holding Bitcoin since 2013, 2014, and I've seen Bitcoin go down, 70, 80% drawdowns. And you have basically taken out a bunch of debt. You bought Bitcoin. You own $5 billion of Bitcoin. The majority of the company's value is the Bitcoin the assets that it owns. And if we do see, I think we kind of agree volatility will dampen over time, but that doesn't mean we can't see a drawdown like that again. What happens when Bitcoin price drops by 50% again? What's your reaction to that? How does that affect your strategy, or what's your overall viewpoint of this possibility?
Well, that's not exactly
the downside of his strategy, right?
Yeah. On a day-to-day level at the company, I imagine there's a ton of people that love this, but what has been any of the downsides of this? Because with every great decision, there's always going to be downsides as well as upsides.
I can't see any downside for the employees. They've all benefited. I can't see any downside for the investors that stayed with us. They've all benefited. Right? I mean, there are critics out there that don't like Bitcoin. And by the way, there are people that will say, you're a CEO, you shouldn't invest. There are people that will say operating companies shouldn't have assets. Right? There's criticism. People say, well, you're a CEO, you should go back to your cubicle and write software and leave the investing to the professionals. But I think that the fundamental elephant in the room here is that the macroeconomic environment is so incredibly unfair to people without assets. Like literally, if you're an operating company or a Main Street company, you have to work 30% harder to stand still. And if you're a Wall Street company, you can stand still and get 30% more. Like the playing field is so tilted in favor of property owners or asset holders against manufacturers and companies that do things that you can't really be successful in business unless you have assets as part of your strategy.
And so me and Sam were asking different questions. Sam wanted to know more about the morale. I want to know if we do see another Bitcoin, crash, draw down 50%, 60%, what happens to your position and what happens to your point of view?
Well, we have permanent capital, so it doesn't make a difference to us, right? Like right now, for example, we have a $3 billion investment gain. So if you cut Bitcoin in half, we would still have an investment gain, right? I mean, our basis is 24,000. So if it goes down to less than 24,000 and stays there forever, then it will have not been a good investment, I suppose. But otherwise, we've got a long-term strategy, which is you buy it and hold it. And I think that a lot of people live in fear of volatility, but a lot of people live in fear of a lot of things, right? If you have enough fear, you won't leave your house, you won't do anything. And so you have to have a bit of courage and conviction. I can give you 1,000 reasons why I think it makes sense to invest in Bitcoin. I can't give you any reason why I should be afraid to do a rational thing. So, it doesn't really bother me, right? This is a rational strategy. If I had it to do all over again, would I? Of course I would, right? Ask all the investors that made billions and billions of dollars, over the time frame, right? Of course you would do it again.
I think for most people, a lot of what you're saying, I think is going to be over their heads that listen to this, to be perfectly honest with you. I think, but I could distill it down into a simple way of looking at it for anybody that listened to this and they were intrigued, but they didn't know, they haven't, sort of gone down the rabbit hole yet, which is very simply, if guys like Michael Saylor, who own public companies that have a ton of money, are worried about what they're going to do because their money is melting, and they're looking for, investment grade, the most powerful treasury asset, and he's decided it's Bitcoin. And Square has put some money in, PayPal has put money in, Tesla has put $1.5 billion into Bitcoin. It's likely that there are more companies out there, and it'll take them 6 months to a year to make this move, but they will take a portion of their treasury reserves and they'll move it into Bitcoin. And these are long-term holders. These are not retail day traders that are going to be, buying and selling the thing like crazy. So the real simple thing is you can sort of invest into the network. You can buy Bitcoin yourself and you can front run the institutions that are coming. That was a very simple thesis, a very simple takeaway for somebody who's listening to this. If you're a company, you better be thinking about what you're going to do with the cash. If you're an individual person, you should also be thinking about what you're going to do with your cash. And the easy move is that for once, you get to front run the institutions and you get to get in before they all get in. Whereas typically the retail investor is last.
I think it's a reasonable thing to say. I agree with it. Another big picture way to say it is there's $100 trillion of treasury assets that have a negative real yield of -10 to -15% a year. That means they're destroying $10 trillion a year of value. The solution is convert all of that money into Bitcoin. Bitcoin's $1 trillion asset. People that understand Bitcoin think it's going to grow to become the $10 trillion asset that gold is. And then it's going to replace negative yielding sovereign debt and then corporate debt. And ultimately it will become the primary treasury reserve network and treasury reserve asset. And so if you have a company, if you're an investor, it makes sense to buy it because it's got a brilliant future and it solves a problem that everybody on earth has. And if you're a company, it makes sense to plug your treasury into Bitcoin because the road to serfdom is working exponentially harder for a currency growing exponentially weaker, right? You're just going to work yourself to death. Put yourself in a position of working as hard as you can in Venezuela or Argentina or Zimbabwe and roll the clock forward a decade and ask yourself the question, what do you wish you did? And the answer is protect your assets, protect your monetary energy, your treasury, by putting it into a scarce asset in a bank in cyberspace where no one can steal it, debase it, or destroy it. And that's the Bitcoin ethos. We're simply trying to make it worthwhile to do the other stuff. There's no point in doing 100 million other things if at the end of the journey, you've got nothing to show for it.
Yeah. Why create all the value if you cannot store it? So here's a better store of value. Yeah.
That's the big idea, and that's a business strategy for everybody. Small, medium, large, doesn't matter.
And I'm just kind of anticipating somebody hears this and they say, but we're not Argentina, we're not Venezuela. Do I really need to worry about this? And what's your answer to that?
My answer is the single most important thing for you to have in your life is a forecast for the money supply expansion in your country for the next 8 years. So I would say that before you invest the next decade of your life doing whatever, stop and study up on macroeconomics and form an opinion about the rate at which your currency is going to lose economic energy. And then you can act accordingly. If you think that the currency is going to hold, by the way, the currency has never held, it's lost 6% of its value every year forever, right? It's always losing 6% of its value. You just have to decide for the next decade whether or not the cost of capital is going to be 8, 12, 16, or 20. And once you make that decision, that will inform you with regard to what degree of enthusiasm will you pursue a hard asset strategy. If you think that the currency is going to weaken rapidly, then you would shift and prioritize hard asset strategy and hard asset acquisition aggressively. And if you think that the currency is going to not weaken that rapidly, you would prioritize other strategies, right? And everybody's got to make that decision for themselves. But when Zimbabwe started to crash, normal companies, management consulting companies started buying lumber and coal and oil and anything they could buy because at least you'll still have it tomorrow, whereas the cash, the currency, the receivables will be worth nothing. So you just have to make that decision. There's plenty of information in the world for you to form your own opinion. Once you've formed your opinion, then you can act accordingly.